afternoon, everybody. On behalf of Techcombank, I'd like to extend our greetings to the analysts and the reporters for the updates of our business performance in our first 9 months of 2019. And this is an event which is organized periodically and which attracts attention not only from analysts but also from the media and individual shareholders in Vietnam and in the rest of the world. We are also live streamed at tcb.com.vn. And to start our event today, I'd like to introduce the executive team of Techcombank, Mr. Whitley Kuang, CEO. So, Mr. Whitley Kuang, we have only started. Welcome. And we also welcome the presence of other members of the executive team of Techcombank who will be sharing with you the business story and the transformation journey of the bank over the last 9 months. To start with, I'd like to invite Mr. Whitley Kuang to give some opening remarks about the bank. Thank you all, and this is we are going to share with you the results of our third quarter and the first 9 months of 2019. Thank you all to the analysts and the reporters for being here. And once again, this is what we do every quarter so that we can give you the most updated information about our business performance of the bank in the most recent quarter, and then we can also deep dive into our business models and the way we operate at the bank. We are also being live streamed right now, and we have the translation services provided between Vietnamese and English and vice versa. So first thing first, I'd like to introduce 4 of my team members to give you the presentations. And for the previous analyst presentation, we have received some feedback, and people would like to know that apart from what we've done well, they would also like to know what we are going to do, and they would also like to know the macroeconomic economics, and then the bank situation, and hopefully every quarter we will begin to give you an update on the macroeconomics and the impact on our bank performance and the economy's performance as well. And then we will go deeper into our bank specific performance. We will give you the story, tell you the stories behind the numbers and who are behind all our successes at the bank. So this is the way we are going about our presentation. So first of all, Mr. Chuang, who is head of treasury at Techcombank, who will give you a more specific picture of the macroeconomics from the world and for the local economy as well, and for the economic sectors in Vietnam. And then Ms. Minh Lan will be presenting about on the impact of the external factors on Techcombank and our business models and our strategies as well. After that, Mr. Hung will be clarifying or elaborating on customer journeys or individual customer and products and services that we offer individual customers, like auto loans and mortgages and credit. And Mr. Hung will emphasize the development of IT at our bank, our digital banking, and the results of our digital banking at Techcombank over the last 4 years, and what we have achieved in that regard, and what is the impact, direct and indirect, on our income and cost management at Techcombank. And last but not least, Mr. Bang will be giving you a wrap-up on our business performance over the last 3 quarters and the most recent quarter, from the balance sheet and our revenues and other revenue components. So that's the general structure of our event. So give me the first slide, please. Once again, I'd like to emphasize that. So here are the main points of our strategy and the results that we have achieved. So we focus a lot of our resources on domestic consumers and consumption and six economic sectors in general. And then we also focus a lot on credit growth. And then in that regard, we focus a lot on individual customers and SMEs. And then Mr. Hung will also be elaborating on that, and Mr. Bang will be also doing the same thing. So why do we do that? We focus our resources to reduce our costs and manage our costs more effectively. So we have operating expenses and risk expenses. So when we focus on individual customers and SME customers, we can minimize cost operating expenses, and we can also cut down on credit risk expenses. Later, Mr. Bang will also show you specific numbers on how we have achieved our targets over the last years. We are not only talking about our business results in the last 3 quarters and the most recent quarter, but we will also look at our performance over the last 4 years or the last 16 quarters. So those are the main points. So you can see that after 4 years, we have had 16 straight quarters of growth in terms of revenue. And after 4 years of promoting our IT, so digital banking transaction volume and mobile banking volume has increased about 30 times. So that's for the last 3 or 4 years. So you can see the impact on how we cut down on our operating costs and credit costs. And so what does that mean? So that means we are focusing a lot on our operational efficiencies, and we are leading the market in this regard, and also in the region in terms of our balance sheet and our equity. So this is what we've done over the last 4 years, and we are starting to see the results. So first of all, Mr. Chung will be talking about what is happening in the world in economic terms, and then Minh Lan will be talking about the impact on Techcombank's business models and strategy. And then Mr. Hung will be elaborating on a particular customer segment, individual customers, which we focus on and which we have gained great results. And last but not least, Mr. Bang will be giving the summary. Over to you, Chair. Good afternoon, everyone. I'm pleased to represent Techcombank today to give you a further analysis of the macroeconomics and the financial markets in Vietnam and how they have impacted our business performance and our strategy in recent times and in the coming years. So when you look at the world's economics, the US and China are competing fiercely with each other, and we think that there are ups and downs in that conflict between the US and China, and there's no conclusion coming soon in that. And you can also have the Brexit in Europe and other political complications in the world, including the East Sea in Vietnam. So our observation is that Vietnam's macroeconomics will continue to grow stably, and especially the macroeconomic balance will be maintained. So the Vietnamese government would like to stabilize our macroeconomics. You can see that although the world economy, including China and the US, economies are slowing down will be slowing down in 2020 according to IMF forecasts. but Vietnam will suffer very little impact from that. And according to forecast, the Vietnamese economy will grow at about 7%, and in 2020, the growth will be around 6.8%. What I want to say is that Vietnam's inflation, which is a very important indicator, has been well under control, and inflation is nearly 2%. And the full year inflation will be estimated at 3.5%, which is uh, below the permissible level by the National Assembly of 4%. So, in my presentation, when I finish my presentation, please remember that the Vietnamese macroeconomy will continue to grow, and we have strong motivation for growth. And then we have another news here. The government's trade balance or payment balance has been improving, which is an important factor to ensure that the government does not have to borrow too much, and this is a fundamental foundation for macroeconomic stability. And you know that the National Assembly set a target of 60% of public debt, and according to our statistics, our public debt ratio is 58%. And in the first half of this year, the government has quite a big trade surplus of more than 60 trillion of spending, and compared with regional countries, Vietnam is performing quite well compared to regional countries, which is encouraging. And what are the economic drivers of Vietnam? So FDI is one of them. So FDI has been flowing into Vietnam quite well, and Vietnam's FDI is one of the highest in the region. After the US-China trade war, if we remove or exclude some large investment projects in 2018, our FDI is growing at 18%. For manufacturing, FDI will grow at 20%. So it shows the FDI momentum is going quite strong. So we will be continuing to see industrial growth. And PMI is also strong, and especially given the context of the world trade going flat, Vietnam's trade is still going well at about 8% up to date. As the Vietnam's economy is growing well, we can see that one of the major drivers is consumptions or consumer confidence. You can see that Vietnamese consumers are confident that they have stable jobs, the macroeconomics is stable, and they also believe that their income may increase, so that's why they are spending more. And on the right hand side, you can see that Vietnamese consumers are spending about 67% of GDP of the country, which is a very high ratio compared to other countries in the world, equal to the United States and higher than regional countries. So on the one hand, this is a large motivation for Vietnam's economic growth. And on the other hand, we can also consider that. Now, personally, I think that Vietnam's accumulation of savings will be higher for this particular growth stage. And it has something to do with Techcombank's strategy. The number of people in Vietnam with a high income is increasing, and by 2020 it's predicted that they will increase to 34 million people with a high income. So that's why at Techcombank we are focusing a lot on mass affluent and affluent customers. And another slide for you for at Techcombank. we can see that we are focusing a lot on customers in the middle, and on the left hand side you can see that the GDP per capita income is increasing, and we are surpassing the low average income level, which is encouraging. And we may also hear that the Vietnamese government is considering some economic sectors which are not included in the government's statistics. So there will be some adjustment in this connection, and Vietnam's GDP per capita income may even increase. With such macroeconomic stability and the main drivers that I have just mentioned, what is the financial market doing? So Techcombank is a member of the financial market, so the financial market plays a very important role in our business and strategy. So you can see that. First of all, in terms of exchange rates, the US VND exchange rate is very stable and will stay the same in 2020, and the SBV has brought about $14 billion, a record high, and Vietnam's reserve will be $73 billion this year. And the reserve to GDP ratio in Vietnam compared to regional countries, that was about 25% last year and 27% this year, which is very high in the region, which provides a strong foundation for the SBV stabilizing the exchange rates. We also highly appreciate the SBV policy is the credit growth control. In 2018, the growth was 18% for the entire industry. According to IMF recommendations, credit growth should equal the growth of GDP plus inflation. So in Vietnam, that will be 10%, and our credit growth is 14%, which is slightly high. So the SBV is trying to put correct control under control, which is a good policy. What about Techcombank? Our credit growth last year was 20%, and this year we have been approved for 17%. And if we can get approval for a higher limit or rate, we can even achieve better for credit growth. So you can see that in order to so our strategy to increase our market share is a correct strategy. And the last slide, which is very important for banks like us, according to what I have just analyzed, for such macroeconomic stability and exchange rate and FDI growth and consumer confidence, we can see that the cash in Vietnam is running well. For example, FDI, FII, and remittances, and we also have trade surplus. And this year, the trade surplus is about $7 billion, which is helping the cash flows in the banking industry alive and kicking, which is a very strong foundation for our growth in the coming time. And we expect that our LDR is at about 90% for next year, and like this year, it will be good. So that's the macroeconomics and financial market situation which we look at or consider for our business models and strategy. And that's it for my presentation. So I'd like to turn it over to my colleague, Ms. Trần Minh Lan, head of our strategy division, to share with you some news.
Thank you, Mr. Trường, for introducing me, and good afternoon, everyone. My name is Trần Thị Minh Lan, and I'm the Strategy Chief Officer of Techcombank, and I'm very pleased to share with you an update about transformation and strategy. Against the background, the macroeconomic background that you have just heard from Mr. Trường, you can see that Vietnam's macroeconomic stability is a good enabling forces in Vietnam, and we also have a healthy and stable exchange rate. And we also have increasing internet penetration and a rising middle class. Those are the drivers and the engines for economic growth, and that is also very conducive to Techcombank's execution of our strategy. And I think that this page has been introduced to you before. This is our strategy on one page. And for those of you who are new to our AP workshop, this is again an overview of our strategy from 2016 to 2020. But I guess for most of you today, this one-page strategy is quite familiar to you. And as you can see on the slide, the strategy of Techcombank is to become the leading bank in Vietnam in terms of efficiency and effectiveness. And this is measured by 30% year-on-year growth, market share of 10% in our selected segments and selected markets and sectors, 4 products per customer, and that is also the model of customer centricity, customers engagement, and also the lifetime value that we want to have with our customers. So with this customer centricity approach, we have 3 very important pillars that we are investing in heavily, and those are the fundamentals for our growth in the future. The first pillar is people excellence, because we believe that in our bank, people are our biggest and most important asset, and we want to acquire and retain and develop talents. And the second pillar is operational and risk management excellence, and we adopt the best international practices in risk management. And in terms of operational excellence, we are trying to standardize our processes and digitize different processes in order to improve our operational efficiency. And last but not least, the third pillar is data excellence. You can see that data is a very hot issue in the world, and those who possess strong analytic skill and good data will be the winner in the market. Good data and strong data analytics will help us to make the right decisions, business decisions, I mean. So those are the 3 very important pillars that underpin our execution of strategy. And on this one-page strategy, we are now in 4 years into the execution of our strategy, and we are well on track. Today, it is the first time that we introduce to you a quite internal indicator, which is OHI. It is the Organizational Health Index. You can see that OHI measures the health of an organization. It is like you take medical checks every year to see how healthy you are, right? And in a similar fashion, Techcombank every 2 years have an internal survey that indicates how healthy, how effective we are, and that is measured by OHI. And recently we are evaluated by McKinsey Global, and McKinsey Global have conducted a survey, and our OHI index is 88. You can see that the health of an organization is reflected through the consensus, the ability to innovate, the ability to create consensus and synergy within the organization, and we rank quite highly vis-a-vis our peers. This is the top 25% of the best organizations in Asia Pacific region, and we are so proud of this very high OHI indicator, and I'm very glad to share that with you today. The second indicator, which is also internal, is EES, which is the which is the abbreviation for Employees Engagement Survey. and that reflects the trust, the confidence, and the engagement of the employees to the organization, and also see how the organization enables its employees to perform at their best. And at the moment, we are using Conferry, which is one of the best, the biggest, five biggest human resource companies in the world who conduct surveys like this. And Techcombank's EES score is also ranking very high vis-a-vis our peers in Vietnamese local market. And we look at the peers in the banking industry as well as in other sectors and industries. And I myself, I have 18 years with the bank now, and I'm so proud of our so high scores in EES. And this is, non-financial indicator that reflects how engaged the employees are to Techcombank. And together with engagement and enablement, the employees will become more and more effective and contribute better to the organization. So with these two internal indicators, the OHI and the EES scores, that brings me to some financial indicators and performance indicators that show you how effective we are. And today we are in the third quarter of the year, and the slide shows you our indicators in terms of ROA, ROE, and the cost to income ratio. And across all the three indicators, we are well ahead of the targets for the year. And this is driven by our strong CASA balance, low NPL ratio, and a high fee income contribution to our total income. So these are the headline numbers that shows you how effective and efficient Techcombank is. By the end of third quarter of 2019, most of our indicators in terms of operational efficiency, like ROA, ROE, and CI ratio, is well ahead of the target. So whether it is internal or external indicators, Techcombank is quite strong in its position, in its leading position in the banking sector of Vietnam. We have quite modest total asset, ranking number 6 in the market. Our ROA and PBT is the highest in the market. Our ROA is now top of the market vis-a-vis other banks and peers in the market, and PBT is only second to Vietcombank, which is a very big state-owned commercial bank in Vietnam. With equity capital ranking number 4 in the market, which is equivalent to that of BIDV and lower than that of Vietcombank. We are now one of the top banks with strong equity capital in the market, but we are the only joint stock bank, the private bank. So all of these indicators shows us a very strong position in terms of efficiency. And this is also reflected in cost to income ratio of 35%. We are very disciplined in managing our expenses and costs, thanks to the contribution of the employees, their engagement and the enablement. The productivity of employees at Techcombank is very high, and even though Techcombank is paying quite high salary to our employees, but our CI ratio is well controlled and one of the lowest in the market. And for the first time in the last 4 years, we are very happy about our CASA balance. And for the first time, 4 years ago, we didn't think that we can make it. 4 years ago, when we drafted our strategy for the next 5 years, we wanted to be better than Vietcombank. At that time, Vietcombank had very strong CASA balance, and Military Bank had also very strong CASA balance because they have their competitive advantages in terms of CASA. But now, for the first time, Techcombank is having a CASA balance higher than that of Vietcombank and Military Bank. And that is a very strong indication of the trust that we have won from the depositors and Vietnamese people and enterprises. When Vietnamese people and enterprises open their current accounts with us and maintain large balances, demand deposits with us, that shows how confident they are when they deposit their money with us. So that is how we compare against our peers in the local market. And how do we compare to the regional peers? And this slide shows you the result. In the Asia and Pacific market, we usually compare ourselves to BCA or Cotex or Siam Commercial Bank or HDSC. Those are the regional, very strong regional banks that we usually compare ourselves to, because in the future, when the economic community in ASEAN and Asia becomes a reality, these are the banks that we need to compete face to face with. In terms of CASA balance, in terms of ROA, ROE, and cost to income ratio, our indicators are very strong compared to those of other banks in the region. For example, our ROA and ROE ratios of Techcombank is ranking very high against other banks. And the contribution of fee income to total income of the bank is also very high, while we are able to maintain a quite low CI ratio as well as a low non-performing loans ratio. So these are the results of our performance over the past 3 quarters, and that is the result of a successful and persistent execution of our strategy. And now I would like to turn it over to Mr. Phùng Quang Hưng, our head of SMB division.
Thank you, Milan, for your updates. I'm very happy to be here to see you after a quarter. And like Milan just said, Techcombank's business efficiency is now number 1 on the market, and it's because of the strategy that we have pursuing over the last years, and it's also based on our organizational health index and our human resources strength, which you can see in our EES and OHI surveys. Now I'd like to go deep into particular segments at Techcombank. Last quarter I talked about SMEs, and in the 3rd quarter our SME growth was still very strong. And today I'd like to focus on another area at Techcombank, which is retail banking. And I would also like to talk about other strategic aspects that we have built in addition to human resources that Minglan just said. For example, we'll be talking about use of technology, risk management, or data excellence that we have been working on over the last years. Now, in retail banking, generally we are still growing well in all main business areas or core areas of retail banking. First of all, when you look at credit, for example, because our strategy is that we try to improve retail credit for SMEs and reduce medium long-term lending in wholesale banking. So the numbers have said it all. For example, our retail loan balance 2 years ago accounted for 42%, and now it's 48%. It's because we have remained high growth for individual customers. Specifically, our growth is about 52% compared to the same period last year. if you compare this first 9 months to the first 9 months of last year, equally important, this growth has been witnessed in high value areas with low costs. As my colleagues have shared earlier, for example, affluent and mass affluent customers. So our retail banking growth is mainly from affluent customers via our products. For example, mortgage product. 81% of customers who use our mortgage are affluent customers. So our mortgage balance has been growing very well at 82% of our total loan balance for retail banking. So financially, that helps us to remain a very competitive NIM at 2.7%. Meanwhile, we still ensure our business efficiency where our risk cost, our NPL, is quite low. For example, for our mortgage, our NPL is 0.7% from 1.9% a few years ago. And for affluent mortgages that we provide via ecosystems, the NPL is only 0.2%. Another important achievement for retail banking that we have managed our operational efficiency more effectively. Take mortgages, for example, when balance increased by 52% year over year, disbursement increased 100% in the first 9 months compared to the same period last year. So what's important is how can we maintain such a scale with a high business effectiveness, or in other words, low operating costs. So that's the core. So we've achieved that by using information technology. If I remember correctly, 2 quarters ago, we piloted some new technology platforms where we digitize all mortgage journeys, or the journey of customer lending, borrowing at Techcombank. So we digitize that process, and that has allowed us to increase our productivity by 50%. And we plan that next year we will increase our productivity by 100%. So that means last year our staff, on average a month, they can serve 15 customers on 15 loans. And our target is that by next year, each staff will handle 30 loans. And that will allow us to grow better with sustainable operating costs. So you can see that equally important, customer satisfaction is another important indicator. So when customers work on a digitized journey, they are very satisfied because they know how their loans are being handled and how long does it take from when they work with developers, when they visit a house that they want to buy, and then they work with a bank to obtain a credit limit, and then they sign a purchase contract with developers, and then they sign disbursement contracts. So everything will be done on the same platform and takes 3.5 days, which cut down on time for our customers and for us as well. So that's about credit. Now let's talk about another important area, the fee collection at retail banking for wealth management products, which generate a lot of fees for us. Like we showed you in previous AP, we are still number one in the industry in this regard. For all the bonds that we issue and list on the market, we account for 90% of the market share of bonds. And the revenue is 80% of the market share, which is also very impressive. We are also pioneer in this area by setting up bond funds so that we can provide customers with more options for individual customers. So as a pioneer in this bond area, because the market size still small, but we still make up 93% of the market share, which is 16.5 trillion. So we are still providing bonds for individual customers. Now, if you look at our first 9 months of last year, our total bonds revenue for retail markets as a way to help business to mobilize medium long terms was like 20 billion, and in the first 9 months this year the number was 35 trillion, which is almost double that of last year. So that continue to create our fee income for retail banking at Techcombank. And when we talk about retail banking, obviously we have to talk about payment. As you know that the Vietnamese government and the SBV would like to promote cashless economy so that we can promote the economic growth of Vietnam, and this is also our focus at Techcombank. And we have developed payment methods, for example, cards or digital channels, so that we can increase transaction volume and value. So in retail banking, Minh Lan said earlier about our analytics capabilities. So we use analytics capabilities to identify customers who are in need of credit cards and who have suitable financial capabilities, and then we offer pre-approved credit card or credit limits. So customers only need to click one time and then their cards will be issued, and everything will be done on our digitized platform. And that has helped us to increase our card volume. For example, Visa debit or credit cards in the first 9 months this year, it has increased by 50 to 55% compared to the same period last year. More importantly, our customers have been using cards more frequently. So after our analytics, we offer a 1% cashback for our customers and other promotions for our card using customers. And debit, Visa debit card volume has increased by 66% over the same period last year. And for Visa credit cards, the growth is 77%, and the transaction value, as you can see on the screen, has increased by 71 and 81% respectively. So these numbers are very impressive and encouraging for Techcombank. As we encourage customers to use our financial services and use less cash, we are using more digital technology, and we have invested heavily in technology. We have identified digital channels as the channels for mass customers, from using basic products, being advised and being able to buy products, and after sales everything is done on our digital channels, from savings to basic life insurance. Everything is done digitally, so that has helped us to acquire a lot more mass customers. But for our focus segment, mass affluent or affluent, who have more sophisticated needs, on the one hand we let them do self-service when they conduct transactions, and including after sale services. And our financial advisors have helped these customers to conduct those transactions faster. If you have tried our digital channels, you can trade investment products on the internet, which is very convenient for you. So that's why we have doubled our customers who use our digital channels over the last year, and now we are very pleased to have 2.4 million customers on our digital channels, and transaction volume is also heartening, because it has grown beyond our expectations. So you can see that this year, this time last year, we have 1.5 million transactions on our digital channels, and now we have 17 million transactions, a 3 times increase. And like Mr. Cook Anh said, compared to 2-3 years ago, uh, we have increased about 22 times, and the transaction volume has increased by 1 million billion over our digital channels, which is a huge amount of money that has aligned with the government policy of reducing the use of cash. Because customers are using digital channels more, they are coming to us more, and they are more satisfied. Last year we have acquired more than 1 million new customers, and if you look at the transaction history over all channels, you can see that it may not be easy to see on the slide, but branch transaction increased by 35%, 30%, and 80% of branch customers open their accounts. For customers who use ATMs to withdraw cash, increase only 30%, but customers who use cards payment via POS, last year it was 1.5 million transactions per month, and now we have 4 million transactions via POS per month. And on digital channels, we have increased 3 times. So it shows that Techcombank has really become a digital bank because a lot of customers are using our services digitally. And when customers are using more of our digital services, and we have become their main bank, and like Ming Lan just said, our CASA is growing very fast. When we look at the general CASA growth of 7%, at Techcombank the growth is 61% over the last 3 years on average. And if you compare now to the same period last year, we have grown by 72% year over year. So retail CASA is now 38 trillion VND and contributing to nearly 60% of the total CASA revenue of Techcombank. If you look at the segments, CASA has increased in all segments at Techcombank, and it has confirmed that mass and affluent and mass affluent are also using a lot of CASA. So our total CASA has grown by 32%, nearly double that of 3 years ago, and that has helped Techcombank to has a highest CASA to deposit ratio in the industry. Of all the main income sources of retail banking has been sustainable, so it means that our total revenue has also grown dramatically. When you look at segments, for the mass segment, we have restructured income sources. 5-7 years ago, we were generating income from higher risk, and now we have converting to lower risk, especially for mass is TD and CASA and savings and fee incomes. And regarding TOI, from affluent and mass affluent segments, these are the two segments with the highest growth, which help us to achieve our TOI growth of 33% compared to the same period last year. Likewise, in SME, our TOI has grown by 30%. So these are our two focus segments at Techcombank, and I strongly believe that with such a strong customer base and more and more customers are using Techcombank services, we have strong personnel team, and we have high organizational health, and we are still investing on technology, and we are still digitizing our customer journeys. So we believe that in both SME and retail banking, our growth momentum will be maintained in the time to come. Maybe I'd like to turn it over to Mr. Bang to give you an overview of the other business areas. Cái đấy thực ra cũng dùng được nhưng nó không liên hệ.
To be here. My name is Bang Trin. I'll pause for just a moment to let folks put on their headphones if they need translation before I get started. Okay, great. So the most important thing I want to leave with the audience today is an appreciation for the momentum we're seeing in our business. My colleagues, Jung has talked about it in the economy, the strength and momentum in the economy. Min Long talked about it in terms of executing our strategy. And then Hung provided some operating metrics in terms of seeing all the hard work that we've put in over the last couple of years and how that's translating now into financial results. So just a quick snapshot gives you a bit of a profile, both in terms of our quarter, 9-month results, as well as, again, looking at the context of the last few years. So you look at our balance sheet, we're up 18% year over year in terms of overall balance sheet growth. But importantly, as you digged into it, as Hung mentioned, we continue to shift our loan book more and more now into retail loans. We also have a greater growth in our bond portfolio as we meet the long-term funding needs of our large corporate customers. And so the balance sheet, again, is taking the shape that we've been planning over the last few years. Importantly, on the liabilities and equity side, our equity position has increased 4 times over the last few years since 2015. This is compared to 2 times growth in our balance sheet overall. Likewise, on the funding side, our CASA has also increased dramatically over that time period, increasing over 2 times, and now representing 30% of our overall deposit base. Shifting over to the revenue side, overall revenues are up 19% year over year. But the important thing here to focus on is both the diversity of revenues as well as the quality of that. So we've talked about our strategy to diversify our revenue base away from lending and having more net fee income. And you can see through the first 9 months of the year, it's at 15%, just over 15%. But as you look back at the last few years, it has increased steadily each year. Fourth quarter is typically our biggest quarter for fee income, so we'll expect to see that pop up in our year-end results. And then lastly, just on quality. If you look at, again, the return on assets as a measure of effective use of our balance sheet, our return on assets has increased from just under 1% in 2015 to now 2.8%. So again, the quality and diversity of our revenue base is what is the most important point to take away here. Now, looking into the actual loan book a little bit more closely, and this is actually our credit growth. We continue to see, as I mentioned earlier, the rotation into retail and really the growth of our business banking SME business as well as shifting the mix of wholesale banking smaller into meeting the capital needs, funding needs of our corporate customers through the bond market. So as you would expect, we've seen very healthy growth year over year, almost 50% both in terms of retail as well as our BB business. Our wholesale bank book has shrunk a little bit, down 10% year over year, and offset that with 8% growth in our bond book. Now, as we head into the fourth quarter, we have a very healthy pipeline in bonds, so you'll see some of that will pick up again as we head into the end of the year. On the right side of the chart is, again, the mix between the tenor, short-term, medium-term, and long-term. We continue to see a very strong rotation here as well. So when you look at it, the important things here to note is now the medium and long-term mix of our book is mainly on the retail side. So roughly 2/3 of our medium and long-term loans are now retail, mainly mortgages. This is up from roughly 50% back in 2016. So the rotation is happening. We're happy with this mix. And next, I'll talk about what this actually means in terms of net interest income. So when you think about what's happening in our loan book, we're shifting from medium and long-term loans to short-term loans, particularly in our corporate segment. In our retail segment, we're increasing the amount of mortgages. So what happens is, as we're shifting from long-term to short-term loans, we're giving up a bit of spread there. So roughly 260 to 270 basis points yield on the lending side. Mortgage rates have remained fairly stable. We're just increasing the amount of our loan book that is in mortgages. But the dramatic impact in terms of the impact on net interest margin is actually coming from our funding side. So as we increase the proportion of CASA as our overall funding, we realize a dramatic impact in terms of cost of funding. The difference is roughly 500 basis points between CASA and term deposits. So you can see that the offset, even though we've had some compression in the lending yields, our deposit funding is much lower, and that has created stability in our net interest margin. So when you talk about a low risk, high return strategy, we're enjoying that. So higher quality and safer net interest income. Shifting over to fee income. Again, fee income we've talked about as a core driver of diversifying our revenues. We have multiple engines in which drive that, from banca to cards to FX sales, which is part of transaction banking. 9 months year over year, we've seen growth across multiple segments. In bank assurance, up 26%. We would expect that to accelerate as we deploy our Banca Direct model, which we've been working on and now have really started to put that into action in the third quarter. Now, card income is also up 26% year over year, and this is despite having a full 9 months of 1% cash back on debit. So even though we're providing this feedback to our customers, we're still growing this card income, and it's actually fees that we're happy to give up. We're realizing the benefit from increased CASA, and that CASA growth has actually outweighed what we've given up trade-off in terms of expenses here. And FX sales is just another example of where, again, we see greater volume as our customers are transacting more and more with us. And so as we continue to build out our capabilities on the transaction banking side, roll out our transaction banking platform, which should come on stream next year, you could see and would expect to see much more growth in this area. This really talks about the ecosystem that we have developed across our different segments. So we've talked about how we are focused on 6 economic sectors, and within that, focusing on corporate clients or ecosystems that have very large value chains. So what you can see from this chart over the last few years is the diversity of our revenue continues to increase across these different segments. So looking at 9 months, roughly 40% of our revenue came from PFS. This is up from about a third at the end of the 2018. A large part of this is, again, mining that ecosystem in real estate all the way to the end customers, providing more mortgages on some of the large projects that we've worked on, and we've seen that really pick up here in the third quarter. At the same time, we continue to be very focused on credit quality. As Hung mentioned, the non-performing loan rates in our mortgage business is 0.7%. Now, I think the key takeaway there is NPLs, again, is a backward-looking measure. We're looking forward with our risk management framework right now, looking at expected loss on that basis as well, enjoying, again, very, very healthy credit quality. But the important thing you can see in terms of a trend over time is the write-off of legacy loans and VAMC, so that the book really now reflects the true book and the quality of the new loans we're bringing on board across our various segments. So 1.8% is a true 1.8%, and that really ultimately contributes to lower credit costs and more operating profit. So getting to the expense side, we've talked a little bit earlier about the cost discipline. Minh Lan mentioned it, best-in-class cost-to-income ratio in the market, both locally as well as regionally. So despite the investments we're making in terms of people and technology and building up our platform to serve customers, we continue to maintain very strong cost discipline. So of roughly the close to 1,000 people we brought on board in terms of headcount this year, roughly 80% have gone to frontline. With 1 million more customers, we need to support them in terms of tellers, relationship managers, call centers, and so on. So we'll continue to add headcount there as we need to serve customers, while at the same time the technology we're deploying is lowering the cost to serve, so we can scale. So together, those two things will again allow us to maintain a very good cost discipline. And then on provision expenses, with higher asset quality, we continue to enjoy lower provision expenses, as you can see, again, dropping off dramatically over the last few years. So bringing this all together, for the first 9 months of this year, very pleased to share that we have enjoyed record highest ever revenues of 14.4 trillion, which is including recoveries, as well as profit before taxes of nearly 8.9 trillion. This is again represents growth across all segments and contributions across all segments of our business and drivers including revenue, lending, non-lending, operating expense discipline, and lower provisioning expenses. So this is, again, very exciting. We are now 75% through the target that we had announced at our AGM. Fourth quarter is typically our strongest quarter, so we would expect to surpass this as we head into the last few months of the year. So despite all that, and the strong growth that we've seen in our business, the momentum we're seeing, our stock price does not reflect this at this time. So when looking at metrics, profitability metrics such as return on equity, it implies a valuation gap much lower than where we would be compared to our regional and as well as our local peers, best in class. I think bear in mind that our stock right now is largely driven by local trading activity because we're at our foreign ownership limit. So our plan, again, is to continue to engage with investors and really share with them why we are uniquely positioned to capitalize on the strong underlying growth of the economy, momentum in the middle class, our ability to serve the financial needs as this middle class grows, and ultimately momentum we're seeing in terms of executing our business, in terms of the work we've done over the last couple of quarters. As we continue to build on our track record, which now stands at 16 consecutive quarters of year-over-year revenue growth, we would expect that investors would reward us with a valuation that is much more in line with our underlying financial performance. So with that, that concludes our formal remarks. Thank you very much for your attention. We'll take a short break, and I think we'll leave some room and time for Q&A.
Cảm ơn anh Trịnh Bành.
Thank you very much, Mr. Bang Ching and other executive members of Techcombank for sharing with us so much information about Techcombank's performance so far, as we are now in the 9 months into the year. And I think that this is a very encouraging story. And now, moving to the next part of our meeting today, we'll have a Q&A session and a discussion between the audience and members of the Techcombank's executive team. But before we move on, I suggest that we take a tea break. We have some refreshments outside, and I would also like you to take a few minutes to fill in the form, a survey that we have put in front of you on your table. See you in 15 minutes.
Welcome back, ladies and gentlemen, to the analyst presentation of Techcombank and the business update for the first 9 months of 2019. And we would like to thank you a lot for listening to our presentations from the members of the BOM of Techcombank. I'd like to invite CEO Nguyễn Lê Quốc Anh to share about the highlights in Techcombank's business performance in recent time. Thank you. We have given you the numbers, and now I'd like to look back at what we have just presented, because we have seen lots of numbers. Now it's time to recap some of them, and then we can proceed with our Q&A session. So one of the numbers that I think we need to look back is on page 18 and then page 19. So we start from the results, and then we talk about what causes the results. So on page 18, so this is the page and all the numbers that you can see. I'd like you to look very closely at our asset. We rank 6th in the market in terms of total assets. But if we compare ourselves to 4 years ago, end of 2015, then our assets has doubled. Please remember, our assets has doubled over 4 years. But now we are still not the one with the highest asset value in Vietnam, but we have 2 very important ratios on returns. Return on assets, we have the highest ROA, in the market, and our cost to income ratio is the lowest in the market. So these two indicators are crucial. One more thing is that how can we ensure the best profitability? So our CASA is number one on the market. So these are the main numbers that I'd like to highlight. We are successful not because we have the biggest asset size, but because we are operating the most efficiently. As Ming Lan said on strategy, please give me the page on strategy. So page 14, please. When we say that we lead the market in operational efficiency, right? So we talk about lowest cost income ratio and highest CASA, not the highest total asset, but the highest ROA. So these are the highlights in the numbers that we have just presented. After 4 years running our strategy, we have achieved our objectives, as you can see from Ming Lan's presentation, and we have achieved almost all our objectives. So that's what I want to emphasize. So now, please give me page on risk cost, please. Page 37. This is one of the most important aspect when you talk about costs. In 2016, we spent 3.7 trillion VND for risk costs, and this year we have spent only 600 million, only 1/6 of the amount that we spent on risk management. If we look at our balance sheet, please go back 2 slides. Page 31, please. So this is our balance sheet shift. We have doubled our assets, so it means that our cost of risk has halved, has reduced 12 times, and that is the main point of our low risk, high return policy. I'd like to emphasize that when we connect all these numbers together, it can all tell our story. Our assets has doubled, our cost risk has reduced to 1/6. So it means we have reduced our risk cost by 12 times. So this is one of the main points about our strategy, about how we operate at Techcombank, and about how we shifted our balance sheet. Now on the next page, we have restructured our balance sheet. So here you can see that the loan for wholesale banking has gone flat for 3 consecutive years, whereas 42 compared to 18, so it's a 3 times increase, and by this year end, loans for SME will increase by to 50 trillion, or 2.7 times increase, and PFS will also increase to 100%, or increase by 1.6 or 1.7%. So our balance sheet has doubled, but the exposure for WB has stayed the same. So that's the point for further analysis and observation. And the last page I'd like to emphasize. So we have the number 60 and 40 for corporate bonds, and please give me page 23. When Techcombank issues bonds, or when we help large corporates to issue bonds, last year we issued around 61 trillion VND worth of bonds, and this year we have sold 40 trillion bonds, whereas we haven't issued a lot of bonds. And So this is the amount from our balance sheet. If we have used up to 24 trillion and we have moved 15 trillion from last year, so we have gradually shifted in terms of cash management for large corporations, and we have also provided investment solutions for high income individuals. So these are the main points of our strategy I'd like to highlight. These numbers are very well aligned with our strategy, and as we execute our strategy, we will achieve these numbers. And another impression for you, and maybe Mr. Hung will help me with that, when we achieve these numbers on our digital channels, on our mobile banking, or when you do online savings, you can see how much the transaction volume has increased. So step by step, we will execute our strategy, and the numbers will be delivered, and efficiency will also improve as we become the number one bank in the market. Thank you all. Thank you, Mr. Nguyễn Lê Quốc Anh, for your recap. And ladies and gentlemen, to those who are present here and to those who are following us online via our live stream, let us move to the Q&A session, and our bureau members will answer all of your questions here. For those who are following us online, please submit your questions to our email, to our investor ir@techcombank.com.vn. So our email is ir@techcombank.com.vn, and we will send all your questions to our bureau members here. So I'd like to invite all the bureau members to be back on the stage for the Q&A session. Mr. Nguyễn Lê Quốc Anh, Mr. Vũ Minh Trường, Head of Treasury, Chief Strategy Officer Trần Thị Minh Lan, Chief of S&D Phùng Minh Hưng, and Chief Group Financial Officer Trịnh Bàng.
The panelists on the stage here, and let us begin with the first question in the Q&A session. Before we receive some questions from the floor, we already received questions through our email address. Any question from the floor? And for convenience, please identify yourself before you ask the question. Thank you. Please. Good afternoon. My name is Linh, and I come from SSI Securities Company. I have several questions for you. The first question is about your fee income. When I look at your slide in the presentation, fee income in the first 9 months of this year is quite flat. I mean, only slightly increased compared to the first 9 months of last year. So what is the reason behind that slight increase? And there is some one-off income from Techcombank Finance. I think that your non-interest income only increased by 2.5% year on year. Why is that? The second question is the net interest margin for each customer segment, because I only see the consolidated NIM, but what about the NIM for each customer segment? For example, the NIM for mortgage is only 2.7%, and as far as I know, this is not too high compared to that of other banks, because I think that mortgage loan should have the highest NIM. However, that NIM for mortgage product in Techcombank is not very high. My third question is your credit growth in the third quarter was increasing by 24%. what drives behind that big increase? Is it because you disburse a lot of loans to mortgage loans for different developers real estate project, and are you expecting the same high increase in the fourth quarter? That's all. Thank you. I think I will let Mr. Phùng Quang Hưng, head of S&D division, to share with us the fee income and also our plan for growing mortgage in the next quarter. Thank you, Linh, for asking the questions. Let me share with you some information regarding our fee income, and you were asking why it is increasing so slowly. Please remember that that is net fee income. We are investing heavily in order to encourage our customers to bank with us. For example, we have the zero fee program in order to encourage our customers who have been using our banking service, and also increase banking penetration and move our customers online. So the benefit of that zero fee program is to increase the number of customers, increase CASA balance, increase the number of transactions, and thanks to a large CASA balance, we are able to reduce our funding cost and also very high CASA ratio. So if you look at the gross fees, our gross fees lines are growing quite well. For example, if you look at bank assurance fee, it is increasing by 26%, and Mr. Bang Chi has shared with you earlier that other fee incomes from bond or FX and other TB fees are increasing quite dramatically. Card business is also a very important source of our fee income, and it is increasing by 30%. So if you look at the gross fee income, it is quite impressive. However, we have to invest. For example, in the zero fee program or the 1% cashback program. So those are the spending that we had to make in order to have a better source of non-fee income, non-interest income, I'm sorry. And another way of looking at our financial reports is that our net interest income is being driven by CASA, a very strong and healthy CASA balance. Let me respond to your other question on mortgage. As I shared with you in my presentation earlier, mortgage is one of the champion products of Techcombank, and it is also a strong engine for our growth. Our balance, lending balance on mortgage is increasing by 67% compared to the last year, and we are disbursing mortgage loans to the home buyers, I mean end users belonging to the affluent and mass affluent segments. And our partners are real estate projects in Gia Lâm and Long Biên, and we are partnering with major real estate developers in order to provide services and products to our home buyers. What is our plan going forward? I think that the taste and the need for homes and apartments in Vietnam is changing dramatically. In the past, people wanted to live in homes close to the center, but now there is a very strong trend that people prefer to live in in a neighborhood with effective and satisfying facilities. For example, hospitals and schools and other facilities. So I think that if we partner with major real estate developers to provide good quality mortgage products to our customers, then it would respond and meet their needs effectively, and those are the foundation for our future growth in the future, further growth in the future. Bang, I think that you can respond to the question on NIM.
Remarks earlier, the real driver of NIM ultimately is the lower cost of funding, the 500 basis points between the cost of CASA versus the cost of term deposits. So that more than offsets any compression we may see across the lending margins, if you will, between our various products and segments of retail and corporate. So although it may look as if it's much smaller, again, higher quality and much more stable and driven by our funding costs. So we've said in many previous quarters, we have to be competitive in the market when it comes to lending rates, but where we can have a distinct advantage in what we've been pursuing, again, is really reducing our cost of funding. So as that proportion continues to increase, we will enjoy that net interest margin stability. So I wouldn't focus too much on what's the margin spread in each particular product, if you will, or segment. It's more the overall, again, the difference between the lending and the funding.
Câu hỏi bạn Linh.
While the average NIM of the bank is 4.4%, which is high, but net interest income is the difference between the funding cost and the lending cost. However, if we look at the credit NIM, which is only about lending, that is the internal fund transfer and the yield when we lend to our customers. For example, we can lend to our customers at 9.2%. Whether the NIM is high or low, I think the most important thing is the profitability of the customer segment. For example, we lend to our customers and we also have the risk cost and other operating costs as well. So we need to maintain a low risk cost and a low operational cost in order to make sure that we are as profitable as possible. We are ensuring very strong discipline in cost management and risk management. So if you look at the NIM of a loan, you can see that it may be high, but maybe the asset quality is not good, and that may lead to a high NPL ratio. Thank you, Hung. And you are also asking about credit growth, right? Let me add some more information on what Hung has said. If we compare Techcombank's NIM between 2018 and 2019, last year our NIM was only 3.8% on average, and this year it is 4.4%. So this is very big success, very impressive. In addition, we are able to allocate our resources and assets to the right segments, as well as optimizing our funding cost. This is against the macroeconomic background of the very big difference between the market 1 and market 2 in Vietnam. So I think that liquidity is also a very important factor. Banking liquidity is also healthy at the moment, and that allows us to have healthy NIM. Responding to your fee income question, as Hung said, we are investing in some program like zero fee program or cashback program. I would like to add one information from the strategic perspective. When we talk about NIM or profitability, Techcombank always want to balance the interests of shareholders, of investors, and of the customers. We believe that it is key to protect the interest of shareholders and investors, but at the same time we want to share our profitability and efficiency with the customers, and that's why we have the zero fee program to our customers for their transactions online. This is how Techcombank shares back our benefits to our customers. When we become more profitable, we have more to share, and that is also fair for them because they transact more with us, they maintain more CASA balance with us. So we don't aim to have highest lending rate. Instead, we want to share benefits fairly between different stakeholders.
Thank you for the answers. We have received another question, and this is a question also from SSI, and the SSI wants to know the breakdown of retail loan, broken down by retail and credit card and mortgage and consumer funding. So they want to know the details breakdown by auto, mortgage and consumer financing. Maybe you can show me the slide on retail banking debt balance. So we on the total of 99 trillion, mortgages account for about 82%. So around equaling 81 trillion, auto loans account for 5% or 5 trillion, and credit cards is 4% or 4 trillion, and the others are very small products. For example, so you can see the numbers and the examples on the slide. So mortgage is 82%, auto loans is 5%, and credit card 4%, and the remainings are for other small products, for example, home equity or PIL. Home equity accounts for a very small proportion because it's not our focus at Techcombank. Thank you, Mr. Ding. Other questions, please? Good afternoon, everyone. I am Na from Vietcombank Capital Management Company. So I'm very interested in the way Techcombank operates, and you are also thinking about why your valuation is not as much as you expect. As a manager of an investment portfolio, I have certain concern. So in this session, I'd like you to share frankly about your risk. First of all, about your concentration risk for your two biggest customers being Vingroup and Masan. I want to ask that we have a total revenues. How much does your revenue come from Vingroup and Masan? So as far as I know, you have lots of things to do with Vingroup, like covered bonds or mortgages for Vingroup's customers by offering preferential interest rates. So how much does your revenue from Vingroup account for your TOI, and of your total loan balance, how much is it related to those two big customers as I mentioned? And about stress tests, if our real estate market has some problem, for example, then how will your revenue be impacted? Another question is also about Vingroup, because we have a large source of bond underwriting when we do customers like Vingroup. After a certain period of time, the margin will be squeezed. So our scale, when our scale increases, and those transactions will become more common, and then our margins will be squeezed. So does that also happen at Techcombank? What is your outlook for the future in this connection? Another question is about CASA. Sorry, another thing about mortgages and You mentioned 82% of your retail revenue is from mortgage, and 81% is from affluent customers. So do your customer buy these houses as first home or second homes? Personally, I feel that these people are very financial capable. So do they only borrow to get a preferential interest for the first couple of years? And what is the prepayment rate at Techcombank? And do they have to pay prepayment fee for Techcombank? And of the three Vingroup projects, they are selling very well. After 2 years, if they prepay and sale decreases, and does that impact on your revenue or not? So Trường will be answering the first two questions, and Hung will be answering the other questions. I also have another question on online transactions volume. In fact, your volume is very high. Can you tell me how many customers have shifted from branch transactions to online transaction? Is it new customers or is it existing customers? And are they new customer to the banking industry, or is it the customers that you have won from other competitors? And what is your outlook for your future growth? So Hung will be answering about the balance sheet and our total. So that will be for Mr. Trường to answer, so we can see a more detailed picture of how we are banking with these two big companies. Thank you for your answers. I'd like to answer your first question. So to us, our exposure with Vingroup in terms of TOI and credit balance and concentration risk only accounts for 9 or 10% of our total volume. I mean, these are for two companies, Vingroup and Masan. Masan accounts for only 2 or 3%, and this includes short-term loans, which will change, and Masan will account for 2 or 3% of total revenue, and we are very much compliant with the law and the SPVs on lending limits and other regulatory limits. So that's about concentration risk. Relating to TOI and other aspects, Mr. Hung will be responding to you. You have mentioned a lot of aspects. You talked about mortgages and disbursement of mortgages. For example, Vingroup is a big real estate developer, and we understand that the way we do at Techcombank is that when we cooperate with any leading businesses in any chain, real estate is only one of the 6 economic sectors at Techcombank. Of the other 5 sectors, we have exactly the same approach. We work with leading business in each of the sectors, and through the first product, we call it a hook product at Techcombank. This is for us to acquire customers. For example, in real estate, the hook product is mortgage, so that customers can buy their homes. And after that product, these customers will become Techcombank's customers, and once they are our customer, they will use our other services and products, for example, digital banking. So now we have more customer data, and then we can do more upsell and cross-sell, and this is the way that we call at Techcombank a mechanism for acquire new customers with low costs. To give you another example, a typical way at banks for mortgages, normally they work with developers for medium long-term loans, which is very high risk, or we can work with distributors or real estate agents. So when the agents have customers, they refer those customers to our banks, and the banks will pay agency some commissions, say 0.5% of the contract. And another example, auto loans, showrooms or car dealers, when they refer customers to banks, banks pay 1% commission for auto dealers. So such acquisition cost is very high. We may acquire 10,000 customers with a lot of costs and solutions, not just mortgages, but also technological and operational foundations or platforms to run an end-to-end process for those area or segments, from disbursement to handover of houses to end users. So that requires a thorough understanding and analysis of the market. And on the other hand, the acquisition costs will be very low. So that's not considered credit risk at all. Of course, the Techcombank's choice is that we choose real estate developers or other businesses who are leading the market in their respective sectors to ensure that they have the sufficient financial capabilities and we can offer comprehensive financial solutions to them, because in the end they are the consumers of the economy. And as you may have seen earlier, our NPL in mortgage is only 0.2% for that chain and 0.7% for our total book. And if you look at our mortgage book, where we do not manage the whole chain, who are the end buyer, and are they in our focus segments? Do we have enough information to credit rate them? And then the NPL will be higher because we cannot manage risk better. So the way we do at Techcombank is very different, quite advanced and very efficient. And you also mentioned prepayment. By nature, according to our statistics, mortgages we are leading the mortgage market in Vietnam. Normally, people will pay for their houses after 4 or 6 years. So that's a big cultural difference between Vietnam and other developed countries, where they may have spent 20 to 25 years to pay off a house. So when they graduate from college, and then they have 10% of the value of a house, and then they borrow, and then they will pay over 20 to 25 years. But in Vietnam, that's not the case. In Vietnam, the banking industry is still quite new to our consumers. So normally, customers will pay off after 4 or 6 years. If you move to the mortgage page, please. This year we have disbursed about 55 trillion worth of mortgages. But if you look at the our mortgage balance increased by 30 trillion VND. So the repayment of principal is about 30 trillion. So after 4 or 5 years, the customers begin to repay the principal. And for example, when customer borrow 4 or 5 years for Royal City or Time City 4 or 5 years ago, and now they are starting to repay their debt, and then the secondary market is also mature, and we also serve the secondary market. And when their income increase, they sell their apartments, and they buy villas, and we also fund those customers. So you mentioned quite a lot of aspects, and you also talk about online transactions, and you mean that are we occupying the market share, or are we acquiring new customers? Actually, it's both, because we understand that financial transactions of banking penetration in Vietnam is very low, only 3%. And like Mr. Trường said at the beginning, we have nearly 100 million people, and the middle class is growing in size. And of course, we have increasing banking penetration. Every year it increased by 1%. So that's about market development. And about winning customers from other banks, I think that's quite obvious. Maybe some of you are using services of 2 or more banks. So it means that after you experience the services from those banks, and then if the technology is advanced and secure, and you don't have to pay fees, you have a full range of products from basic to sophisticated, and then that's why they opt for Techcombank for their banking needs. And of course, we've seen quite a big ratio of customers moving from other banks to Techcombank. How about?
Each month, we are acquiring more than 100,000 new customers. So we now have 1 million new customers since the beginning of the year who are opening a mobile banking account with Techcombank. And those customers come from the provinces as well, and the mass segment as well. So from the unbanked population, now they become customers and users of our services. Regarding the physical channel, when the number of customers has increased by 30% compared to last year, the number of customers who come to our branches have increased by 30% as well. And they come to our branches for example, cash deposits. Counter transactions is mainly cash deposits. And after they make that deposit, they don't have to come to our branches any longer because they can conduct all transactions on our internet banking and mobile banking application. And now customers mainly come to the branches for advisory services. You know, the physical channel, the branch channel is costly. So we use that expensive channel to provide advice to our customers in order to meet their needs. For other transactions, they can conduct those transactions online and mobile banking application. So again, as you can see on this slide, the number of transactions on online banking is increasing dramatically. If you look at those numbers, and in September we have 17 million transactions, and compared to January last year we only had 2 million transactions. That is for money transaction and some other types of transactions rather than just view. This is real transactions. And we have around 300 branches. And if you divide the total number of transactions by the number of branches we have, you can roughly calculate and see how many transactions does each branch have to handle. And then you can see that the number is huge. And a branch cannot handle such a big number of transactions if all those transactions are conducted at the physical channel. And as Hưng said, we have 1 million new customers to our Techcombank, and many of them have never banked with us before, and they are switching from other banks, or some other customers are new to banking. And we have quite impressive increase in our number of customers. And from the beginning of this year, we have added 1 million customers to our customers base, and from now till the end of the year, if this trend continues, we will have a lot more customers. And 1.5 million new customers for this year is equivalent to a higher banking penetration ratio. 1.5 million new customers coming to Techcombank means a significant increase in the penetration ratio. And why do people come to us? It is because our transaction is convenient, is fast, is secure, and we can allow them to conduct different types of transactions. including sophisticated ones. And if I understand you correctly, you are wondering whether we can continue to grow at such pace into the future. If we can add 2 to 3% of our market share, I mean customers using Techcombank as their main bank, then we are confident that our market share will continue to increase. But that also means that we need to become better and better in terms of quality of service and convenience of service. And let me share with you a specific example of customer satisfaction. For example, we have 15 to 17 million transactions a month. If we don't have the online application option, then the customers have to go from their homes to our branches, one of our branches. They have to queue and wait, and then they have to conduct the transaction. Maybe the transaction only takes 5 or 10 minutes, but we have to factor in their waiting time, their traveling time from and to their house. So conducting transactions online saves them a lot of time and effort. Conducting transactions online is convenient, easy, and we give them 1% cash back. As Minh Lan said, this is a cost for our bank, but this is also a drive for our customers to transact with us more, to choose Techcombank as their main bank. So instead of charging fees for the transactions that they conduct with us, we give them 1% cash back. So this is 3-in-1. It is convenient, it is easy, and it is not only free, the customer can also get 1% back from the value of their customer from their transaction. So customers are happy because they can save a lot of time and effort waiting and traveling to our branches, and that's how we improve customers' experience when they bank with us. We have been talking about customer centricity, we have been talking about customers' experience and journey, and digitizing our transactions. This is all we do to ensure that Techcombank is the bank of choice. You also ask us whether we are relying too much on a small number of our partners like Vingroup. But if you look at our partnership between Techcombank and Vingroup, you can see that they are cash rich. They don't borrow from us. Our partnership with Vingroup is not lending, and that's why when Trường talk about our lending balance to Vingroup, it is quite a small number compared to the total size of our balance sheet. Another partner is Masan, and Masan is a large shareholder of Techcombank, and because it is a related institution, according to the law on credit institutions of Vietnam, any lending to Masan has to go through our senior credit committee. So we ensure optimal transparency in lending to related parties. We are not allowed to disclose to you the specific names or the specific figures to different partners, but we always ensure strict compliance with the laws and transparency in our transactions. We partner with our key partners in order to meet the needs of the end users. For example, for real estate, we don't lend to real estate developers. Instead, we give mortgage loans to the end users. Let me share with you some other information. If you look at our loan book from wholesale banking, can you please show the slide on wholesale banking loan book? you can see that our lending to large corporates, I mean to wholesale banking customers, is flat, roughly flat over the years. Because large corporate customers have a bargaining power, and if they borrow from us, they usually demand a low interest rate. So we are not very interested in lending large amounts of money at low interest rates to those guys. So instead of lending them money, we help them meet their need for capital by giving them bond issuance advisory service. That's how we work with large corporate customers, and that's why our operational efficiency and the profitability of our balance sheet is very high, and it's quite different from other banks. Another question that you posed is the squeezed margin when issuing bonds. So what is our reaction to that? And I think this is very interesting question from you, Ms. Nga. By nature, can you please show us the slide on bond and bond issuance? As I said in my presentation earlier, our principle is that we are selective in everything we do. So in providing bond issuance advisory service, we are very selective to which issuers we provide advice to. Here we are talking about listed bonds. And in order to list bonds in the securities market, the issuers have to meet certain conditions in terms of governance, in terms of information disclosure, and so on. So only strong and trustworthy issuers are selected by Techcombank, and their bonds are good quality bonds. And I think that this is also a good thing for ensuring liquidity in the market. In the past 5 to 6 years, Techcombank has made a lot of effort to develop our capabilities, including the operational and technological platforms in order to operate the bond market and bond fund. And that fund allows our bondholders to have higher liquidity. They may buy the bond today, and in 2 weeks' time, in 2 months' time, if they need liquidity, they can resell the bond through the fund. Other organizations do not have such capabilities and finance in order to invest in such operational and technological platform to allow secondary trading of such bonds. So the margin may be squeezed, as you ask. However, I would like to say that there is a big demand for our bond advisory service. There are a lot of companies and issuers who would like to use our bond advisory service. However, as I said, we are very selective in terms of who we provide advice to. And for that reason, our margin is not squeezed yet. And I think that in the future, maybe there is a risk of that margin being squeezed. However, I believe that if we are able to manage a low risk cost, a low operational cost per one product unit, then we would be the winner of the game. That's why Techcombank is very clear in building the foundations, the fundamentals, the capabilities. So that is the differentiating factor for us. Rather than just having a product and then trying to sell that product in the market. I have been sharing with you about our credit growth in different customer segments. For example, we are developing our business in FMCG sector, and FMCG is a fast-moving consumer goods, and we provide suppliers finance and many of those suppliers are not distributors of Masan. So for SME customers, we are able to grow our credit by 41 to 42%. I don't know whether Mr. Cheung wants to add anything else.
If you look at this sheet, you can see that our SME segment, you are concerned that Techcombank income depends on some large corporate customers, and you can see that our SME segment has been the fastest growing segments at Techcombank over the last years, and you can see that it's from more than 10 trillion, now it's more than 40 trillion worth of revenues from these customers, and if we obtain approval from the SPV, the number may increase to 50 trillion. So this is a very profitable segment for us. And apart from individual customer, SME customer are also our strategic customers. And in acquiring SME customers, we use other economic sectors, like Mr. Hung mentioned. FMCG is one example. And we have to be very honest here with you, because you asked us to be honest and frank. It took us 5 years to build our success in real estate sector, and over the last 1 or 2 years we are very active on working on other economic sectors, and we strongly believe that in the next years these economic sectors will generate large values for Techcombank. Thank you all for your questions. I hope that the answers have satisfied your questions, Ms. Nga. Microphone, please. Can you share us the contribution from Vingroup to TOI? Because we understand that your exposure, credit exposure with Vingroup and Masan is not high, but I mean that all the incomes relating to Vingroup, including bond advisory, underwriting, and other services. For example, I asked, when you do stress tests, when they sell their houses, and how does it impact your revenue? Maybe it's impossible to happen, but as investor, we may need to think of that scenario. So if you give me the appendix page 45, you want to ask about our TOI components, right? So okay, so I'm gonna stand up. For the first 9 months of this year, our TOI is 14 trillion, retail is 5.8 trillion, and how much of this 5.8 trillion is from Vingroup? I can tell you that the number is not considerable, and so the biggest number must be from WB, 3.7. If you say that the ratio is 50% of WB, then the ratio is not very high. So you can see from the numbers here. If you talk about net interest income of retail, 4.4 trillion, WB 2.7 trillion. So our exposure and net interest income from WB for Vingroup or Masan, you can see here. So 10% is 300 billion compared to 14 trillion. So the ratio is not high. So if you dig deeper into the number, you will see the relation, the correlation. So after Circular 14, you see that the requirements on concentration risks on balance sheets have to be complied with. So I just want to share with you all these specific numbers. So most of our number are from retail, and Mr. Cheung may elaborate on markets, but most of that is from transaction banking, including FX and hedging contracts and customer flows. In our financial statements, we have very specific numbers to be reported. I just want to share with you all the numbers here to ensure transparency. If you look at WB numbers for this year compared to last year in terms of TOI, the increase is approximately 1%. About our strategy, we said that we maintain WB, and you can see that after 4 years, WB lending book has not changed, whereas retail and SME revenues have increased more than 30%. So our strategy is to increase revenue by 30% by segment. So this is in alignment with our strategy, and we have taken specific steps to achieve our targets. And like Mr. Hung mentioned, when you talk about interest income of retail banking, especially value customers, and the increase at BB and retail and SME has increased by 34%. So I just want you to look closer into the numbers. Of course, from outside, every time Vingroup has a new project coming out. Of course, Techcombank is one of the banks that help them to disburse their customers. You can ask me why, and like Mr. Hung said, on our mortgage page, what we can do for disbursement for home buyers, we can do that in 3.5 days instead of months at other banks. So this is what our customers need from us when they say that they just want things to happen quick, 1, 2, 3 weeks, and then they have to get disbursed. So the necessary condition is that we focus a lot of resources. For example, on our M Plus project, has spent more than $6 million, and in the next 3 years we will be spending 20 millions on our system, and this is no simple task. And our competitive edge is that we will be pioneering in this area. And like Mr. Hung said, a lot of other projects also want us to provide disbursement or bond underwriting. The credit growth limit from SBV is specified. If we want to grow 35% for retail and SME, we cannot grow credit for WB. It's as simple as that. So Mr. Hung said that for other large corporate customers, they want us to issue bonds for them. We have to say thanks to them, and we have to consider this because we are unable to grow that bond issuance forever. So one of our expectations set at the beginning of the year is that we obtain approval from SBV for Basel II, and we expect that in a couple of years' time we can grow our credit based on our CAR adequacy ratio, and then we will be more likely to cater to other large corporate customers. Right now, our annual credit growth is 30%, and SPV has allowed us 17% credit growth, and we have spent all the 17% for retail and SMEs. So that's why WB has gone flat. So that's the way we work out things at Techcombank, and until we have other limits, we can have other plans accordingly. Next question, please. Thank you, QA. I hope that the answers have satisfied your questions. We only have one last question. If nobody here has any question, I already have a question in my hand. Good afternoon. I'm Ha from HSC Securities Company. My question is also related to Ms. Nga's question earlier. I want to know that of your mortgage balance, how many percentage are from Vingroup? Because a lot of investors have looked at concentration risks from another perspective. The Techcombank loan balance, does it depend on Vingroup or not, especially in retail? In 2018, retail increased very little, even decreased in certain quarter. Why? Because at that time, Vingroup projects were delayed and they didn't sell their apartments out to the market, so it impacted on Techcombank's retail loan book. So investors also think this is another aspect of concentration risks. Can you give me an answer on that? But in general, be assured, investors. So this is my explanation. Put it in another way. When Techcombank built a platform with all our industry expertise, especially in real estate operation and end users, how much is the price of an apartment, how can we market those apartments to customers, and then we help to finance them to buy such apartments and houses. So we need to ensure that we have a thorough understanding of the real estate industry, and then we build a platform, a technological platform, and operational to provide end-to-end support. Given that Techcombank can serve any real estate developers, but can Techcombank serve all of them or not? The answer is no. And like Mr. Qa said very clearly, we have a credit growth limit imposed by the SPV, and of course we have the luxury of the choice to select the choice of our customers. If a bank does not understand an industry or does not develop a suitable platform, and then how can they choose a suitable developers? They will have no capability to select the best developer with lowest risk. They will have no choice. But at Techcombank, we do have that choice or option. And the credit growth, if the credit growth is 30%, then we can serve other customers. But because we have a 17% credit growth limit, so we have to be selective. It's not just mortgage. What is most important is the end buyer. So after they use our mortgage product, that end buyer, we're talking about wallet size here. We have to determine if their total financial needs is high or low. If the end users belong to the affluent segment at Techcombank, then we will choose to serve that customer. So it's not only about mortgage product alone, because after that product we will serve other products and services to that customer. Then the profit per customer will be high. Let me give you another example. On average, a customer on mortgage, that mortgage is only one product. On average, they use 3.5 products from Techcombank. So the profit is from the 2.5 products, not just from the one mortgage product. And like Ming Lan said, we have the strategy of customer centricity. Unlike product centricity, we only focus on a certain product demand, but customer centricity means that we would like to provide comprehensive solutions to Techcombank, and they will use Techcombank as the main bank for 70 to 80% of their transactions, and then the profit from them will be high. and they will create more value for us. So that's my explanation. And given that approach, we are working on other economic sectors as well using the same approach, because we believe that given our asset quality and our risk management capabilities, and given the macroeconomic situation and a higher credit growth limit from the SPV, then we can also grow credits in other economic sectors. It's not because that we lack opportunities for credit growth, but our end customers, they also need to be financed for their other needs, for example, auto loans. After they buy mortgage, they use credit cards, and now they want to buy a car. How can we say no to them? Because we do not focus on auto loans. No, at Techcombank, we focus on all financial needs of our customers. That's why we are working on 6 economic sectors, and we are still working on other economic sectors using the same approach. So we have to build capacity or platform to cater to the entire chain in order to create values for our customers. Page 45, please. Let's do a simple math. I know that you have a feeling inside of you, so let me use the numbers to explain your feeling. So you have 60 trillion worth of mortgage balance. Now, if our NIM is 4%, multiplied by 60 trillion, so that will be 250 billion. It's not 2.5 trillion, but 250 billion of the. So we are talking about the 5.8 trillion here. We need to know mortgage only account for 5 or 6% of the 5.8 trillion here. It's not 50% that comes from retail. So let's do such a simple math, and then we'll see the picture. Now we need to dig deeper into the numbers here of the our 4.5 trillion net interest income. Half is from the interest for the customers, and our cost of fund is cheap. So of this 10 trillion, half or more than half, or 60%, is from deposits, and the rest is from lending interests. So we need to make more specific comparisons between the numbers, and then we realize that when we feel why the mortgage is high on the balance sheet, because it's the most the safest and durable asset. Hung said it's 5 years, but in the market the mortgage is the longest and is followed by auto loans. So that's why we still put mortgage in our balance sheet for individual customers. And let me clarify a little bit here. If Vingroup stops selling their houses, I think that is a very unlikely scenario. But from a risk perspectives, when we work with investors, we work with 5 biggest investors in Vietnam, and we go along with their projects. And what Hưng just said, and I'd like to reiterate here, when we select our customers, basically they are retail customers. They are our focus customers. So for investors or developers, when they build projects, and they focus on middle class customers, which are our select customer group. And that's why our strategy says that we try to sell four customers for four products per customer. And so our revenue is not just from one mortgage product, it's also from other products as well. So that's my clarification. Next question, please. Thank you for the questions. Due to the time limit of the event, we may not be able to have more questions. However, can I have one question, please? I'm Nam from the investment company, and thank you, Mr. Quốc Anh and everybody else for your presentations. I highly appreciate your business models. I'd like to focus on P&L. For your CAR, I haven't seen your disclosure of your CAR yet. What is the ratio by the end of Q3? And if you look at P&L, in Q3 alone, your profit before provision is almost negative. Your CAR is almost the lowest in the market, and your COF is also optimal on the market. And like you said at the beginning about the macroeconomics, the consumer confidence index is also record high. So everything seems to be positive, and your customer acquisition is also strong. And given that strong growth at Techcombank, what is your next motivation for your next stages, given your continuous growth over the last 4 years with your relatively low provisions? Maybe it's sufficient for your asset quality, but you still have no savings. So assuming consumer confidence index goes down in Vietnam in coming years, and your provisions is not very high in the industry, and then your provision cost will go up. So that's the logic. So do you have any plan for provisions that can be sufficient and that can give you some savings for the future, rather than you are making your profit look beautiful? So I'd like to hear your explanation.
I think the CAR ratio is on the screen there. Finished the third quarter at 16.5%. So again, highest in the sector in Vietnam. So very well capitalized. We're also not paying out dividends, so that actually adds as well in terms of retained earnings. So 16.5%. I just want to make sure that you have that number.
Câu hỏi thứ hai.
The second question that Nam asked us is the third quarter profit, right? PBT for the third quarter and the provision for the third quarter, right? So if you look more deeply into our financial statements, you can see that all the figures, all the numbers are there. As we shared earlier, our TOI in the first 9 months has been increasing by about 18 to 19%. And if you look at the third quarter PBT, it was 3.2 trillion, which is also growing over the last quarter. And if we look at the year-on-year growth rate, I mean the third quarter PBT compared to last year's quarter 3 PBT, it is also growing. So personally, in my presentation, I stressed on retail business as our core banking activities, and we have talked about different sources of income and the diversity of the revenue sources. For example, on retail business, our year-to-date growth in TOI has been increasing by 33%, and for the third quarter alone, it is increasing at 38%, and BB is also growing equally. And those are driven by our fundamental strength. For example, how can we maintain 4.4% NIM? And we have been able to do that, to maintain that high NIM for the last several years. And many customers have chosen to bank with us as their primary bank. And this is a very important comparative advantage, thanks to a low funding cost, thanks to a large CASA balance. Some other banks in the market are now having to pay very high interest rates on deposits, and thus they have to bear very high funding cost. So as you can see on the revenue side, we are able to grow our core banking revenue sources and maintain diversity in our revenue sources. And there is also very good opportunity out there because the banking penetration rate in the Vietnamese population is still very low, and the number of products being used by one customer is low. 95% of Techcombank's retail customers have not used mortgage product, for example. 80% of the customers have not bought bancassurance policies from Techcombank. When the markets are slowing down, when the economy slows down in the future, we believe that we can still maintain a healthy business model because we have been trying to shift our balance sheet structure, our lending mix. Our expected loss is low, our risk cost is low, and with that we have quite a good buffer against economic slowdown. Banking is a risk business, so when the economy slows down, those banks with low risk cost will come out of the slowdown stronger and will win the game. We try to maintain low risk cost, and if the individuals use our banks as their primary bank to meet their daily needs, for example, making payments, paying utility bills, paying for grocery purchases. So those are the risk-free income. So those banks that have a low risk cost thanks to a high large number of customers using the bank for their day-to-day needs, that bank will survive and become stronger. So I hope that I addressed your question. Can we please go back to page 39? Here we are talking about provision, and as required by SBV, we need to maintain certain provision as per SBV's requirements and regulations. You can see that our provision is lower than that last year. It does not mean that it is lower than the required level by SBV. We always comply with regulators' requirements and regulations. However, our provision this year is lower than that last year, and this is thanks to the improved asset quality, and we are shifting the structure and the composition of our balance sheet. We are now making more loans to small and medium-sized enterprises and retail customers and away from large corporate customers. If you look at page 37, for example, you can see that our recoveries in the first 9 months of this year is around 600. And this is thanks to the provisions we made in the previous years. In previous years, we took a very prudential and conservative approach to risk management and debt collection. And we are trying to resolve with a legacy of our bad debts in the past year. Each month, we have a provision, and even though there may be some delays in different projects, that will not hurt our TOI too much. So we take a very conservative approach to risk management and setting aside provision. And if there is some delays in real estate project, and therefore we have to delay our disbursement to mortgage loans of 200 to 250 million, that will not hurt our revenue too much. We have different other real estate projects, but the key here is that we are very selective in terms of our customer segments, and we only make disbursement based on the credit growth cap provided by the SPV, allowed by the SPV. So what Hung was talking about in quote and unquote is the luxury to choose who we bank with, who our customers will be. And we never lend more than what the SPV allows. Delays in some real estate projects will not hurt our revenue too much. For example, this year, if our revenue is 20 trillion, then a delay of 200 million is not too much. Yes, as Ling mentioned, last year there were some delays in real estate projects, and it was true. It is true. But for Techcombank, if you look at our figures and numbers in 2018, we managed to meet our business targets in terms of PBT and TOI. That means we always have plan B, plan C. That means even though there were some delays in real estate projects last year, our revenue targets and PBT targets were still met. The last point that I would like to add there in response to your question is to go back to our 6 economic sectors that we are working on. During the past 5 years, we are trying to develop and build on our capabilities as well as our superior comparative advantage on 6 economic sectors, including real estate. And thanks to that capabilities, then we are able to choose the partners that we want to do business with. And that's the luxury that some other banks cannot afford. And that's why we have low EL. Let me just close the Q&A session by reminding you all in our choice of different customer segments and 6 economic sectors. For retail customers, our selected customer subsegments are affluent and mass affluent customers. And any companies and corporations that own affluent customers are strategic partners with Techcombank, and at the moment we are working with those companies in order to serve the end users, I mean the affluent customers. For example, the customer profile of those who live in vingroups, apartments or villas, who stays in Vingroups or hotels when they are on vacation, or who shops at Vinmart supermarkets. They are mass affluent and affluent customers, and that's why we are partnering with Vingroup, because we have joint customers. Vingroup's customers are also Techcombank's customers, and that's why we are working with Vingroup to serve those end users and customers. And you can see that our strategic partners are the names, the big names that are serving those selected customer segments. Okay, so for the interest of time, I think I'm afraid that we have to close our Q&A session there. I know that there are many other questions, and we also have online questions, and maybe we can take one more question online and then we close. Okay, thank you for that. Actually, we have been receiving so many questions online, offline, and let me just select one. For those of you who are watching our live stream meeting through webcast, we can't answer all of your questions, but I promise that we will come back to you to respond to your questions later. Okay, so a question online from Dragon Capital, and let me read the question in English because the question is in English.
So that was a question from Dragon Capital about 563 receivable at end of Q3. What is the nature of that amount, and do we have to include it as a provision for 2020? Cảm ơn câu hỏi vừa rồi của Dragon Capital. Thì tôi sẽ trả lời nhanh. Thì chúng tôi có những cái tài sản mà
and receive partial payment for that upfront. So we've booked it as a receivable, but being conservative and complying with Circular 2, we have actually treated the loan we sold off as still on our balance sheet, so took a provision for it. We don't expect to take any future provisions for it, and hopefully that answers the question.
Cho câu này để mình nói rõ hơn á.
Thank you, Bang. This is a debt from a few years ago, including IFRS 9. We are working on this debt, and we have written off that debt, and on the repayment of the debt, and we have the schedule for the repayment, and right now it's not written as a non-performing loan yet, right? Chúng ta đã dự phòng cho cái khoản nợ. According to IFRS 9, it's not a non-performing loan yet, but we had to set provisions for it, and we just want to ensure the safety of our revenue. So it's not a NPL itself. So this is the last online question. For other online questions that we are not able to answer here, we will get back to you online. A question from Katai Holding. So they want to ask about Techcombank retail digital strategy and retail strategy at Techcombank. On our digital banking and retail banking strategy, in general, Minh Lan already shared about that, and me myself also shared about our mass affluent and affluent customers, and we want to focus on increasing the number of products per customer. So when we do business, we always need new customers. For example, when you set up a company, you need to find customers, and then you look at economic sectors and value chain to acquire new customers on a large scale with low costs. And then we use data analytics, and then we offer basic products via digital platform. So they use Techcombank as the main bank, and then we use data analytics to upsell and cross-sell and improve customer experience. It's simple as that. On digital banking strategy, we have shared some examples on digital channels. We have invested heavily on digital channels to provide support to our customers given the high transaction volume, and we also investing on digital banking to ensure that our business processes from identifying customers, identifying needs, and then meeting customer needs, and after sales services, we have to digitize the entire process. And when we do such digitization, our business efficiency will be high, and customer satisfaction will also be improved. So on digital banking, as I have shared with you several times, we have spent more than $300 million on all technology aspects, on changing customer journey and technology platforms to support risk management and so on. And on digital channels, in the next 5 years, Techcombank will be spending up to $40 or $50 million to develop and maintain digital channels. So that's an example of our digital banking strategy, which is the interest of investors. And I hope I can come back on this topic later. Thank you, Mr. Hung, and the BOM members of Techcombank for giving the answers. And we have come to the conclusion of our event. I know that you still have lots of questions, and we have received lots of questions for you, but we are unable to answer all of your questions here. However, via investor relations, we will get back to you as soon as possible. And thank you again for being here and asking questions. And I hope that you will share our story to the financial community and every single Vietnamese. We hope to see you again in other Techcombank events. And for those who follow us online, thank you a lot, and I hope to see you very soon.